Good morning. Good morning. This is Valerie Leonard. I am the founder of Nonprofit Utopia. I want to welcome you to today's forum. We're going to be talking about employee tax credits as a form of COVID relief. And as you know, we've been focusing on federal funding as it relates to grants, but we thought we would take a break from that today and focus on something that we think is really, really critical for nonprofits, especially as you recover from COVID-19. By now, we're all familiar with PPP and EIDL loans and all of that good stuff. In fact, those are household names after a year. But what we don't talk about, and what some of us and probably most of us don't even know about, are ways that we can use employee retention tax credits to leverage those PPP and EIDL loans. All right. In some cases, these tax credit programs can make the difference not only between whether or not employees stay or leave your organization, but whether or not you can even keep your doors open. So we're going to be speaking with Chitra Aiyar, and she's the founder of nonprofit COVIDrelief.net. She is a self-described PPP whisperer, and I can concur. She's more than a whisperer, but at any rate, you'll find out for yourself. She is going to be sharing with us insights on how nonprofits can take advantage of the employee tax credit program, employee retention tax credit program. You can get up to $33,000 per employee through the American Rescue Plan. So she's going to share information about the American Rescue Plan and how you can take advantage of these credits. All right. She'll also talk about ways that you can prepare for potential audits and the board responsibilities for making sure payroll taxes are in fact paid. But before we go through that, I want to give you a little bit of background on Chitra. She spent the entirety of her 25-year career, and she doesn't even look like she's 25 years old, let alone 25-year career in the nonprofit sector. She's been an organizer, an attorney, an educator, and most recently, the executive director of the Sadie Nash Leadership Project. And this is an award-winning feminist organization recognizing and amplifying the leadership of young women and gender expansive youth of color in the New York City and Newark, New Jersey area. At the start of the pandemic, she began consulting with FMA, now known as BDO FMA, and she discovered her talent. And again, she has called herself the PPP loan whisperer. And you'll find out that she is more than a whisperer. She started the nonprofit COVIDrelief.net portal with the mission of reading and digesting all the small print around PP loans and tax credits so that you don't have to. She shares everything you need to know to effectively and efficiently access the federal relief you're entitled to so that you can continue to do the great work that you're doing. Chitra was part of the four-person guidance team that developed the PPP toolbox, and she also designed and led the PPP Forgiveness Racial Equity Initiative, which supported over 300 nonprofit leaders of color to secure PPP loan forgiveness and apply for tax credits. Chitra is enthusiastic and committed to supporting nonprofits navigate the maze of pandemic relief with ease, integrity, and community. And you can find out more at nonprofit COVIDrelief.net. And we'll also share with you, if Chitra doesn't do it, and Chitra doesn't do it herself, we'll share with you links to some of those resources that I just cited. All right. So good morning, Chitra, and thank you so much for joining us. It's indeed an honor and pleasure to have you. And before we get started into the discussion of employee retention tax credits, I just want to lay a foundation because I'm sure our listeners are all at different points in terms of exposure and knowledge of various terms that we'll be using. So just, very briefly, can you tell us what the PPP and EIDL loans are and how they came about?
Sure. And I'm super happy to be here. I'm a big fan of your work
Thank
and
you.
of your audience. And I'm going to share my screen and this is something we can share with everyone afterwards, because I think when we're talking about specifics, it's often easier to be looking at slides of it. So 1 second and I will,
Okay.
there we go. Okay.
Alrighty. And I'll add it to the stream so folks can see. We
Yes. So
lost. Okay, we lost the share.
we lost the share. Hold on one second.
Okay.
I don't know. I'm
Okay.
not sure where it went, but it's
Okay.
coming.
Yes, yes, yes. And I thank you too so much for taking the time to, to do this. I think people get so intimidated when they look at the details and then all the legalese around tax credits, and not all tax credits are
Yeah.
equally.
I I agree with you, and I think part of what helps is I'm an attorney who actually really likes small print. So I feel like I'm in my happy place looking at the small print and
Mhm,
translating it. So I'm just going to start just with a quick thing on PPP loans. The main thing is PPP loans are no longer available. And so it's not something that we can have anymore. But a couple of important things that people may not have heard if you've been not tuned in for the last few months is to make sure that you know that getting the PPP loan, if you received one, it's no longer in conflict with these tax credits or the shuttered venues grants. So you can get, if you got the PPP, you're now eligible for everything. There was a period of time where getting the PPP meant you couldn't get other things. That's no longer true.
okay.
Um, there's been, I think, maybe 9 versions of forgiveness applications that have been released. I put
Mhm,
links here, and again, we can share this out with everyone. The most recent version, you can tell if it's the most recent version because it has a date of January 19th on it. That's important. There's 3 different versions of this forgiveness application, depending on how big your loan is and whether you've qualified for what's called a safe harbor. And the biggest thing that folks should know is we're coming up to the time when people need to apply for forgiveness.
mhm,
Technically, you don't have to apply for forgiveness. You could apply for forgiveness at any point, but you do need to start making payments on your loan if you haven't applied for forgiveness. The moment you apply for forgiveness, that gets essentially stopped. So you need to submit the application to your lender,
mhm.
and then it gets held until they make a determination. So I just put a couple of dates here so that folks can get a sense. Just because we're coming up on it, it depends when you
Mhm.
got your loan. But I wanted to flag that that's coming up. And again, you just need to submit it to your lender at any point. And what I'm doing here is I'm assuming that you're taking 24 weeks. That's your lender is going to assume that as well because they don't know. But we do
Okay.
see that some of those dates are coming up depending on if you got your loan in April or May.
Okay, got it.
And for the EIDL, which is the economic injury disaster loan, there's sort of, I separated this out because there's 3 different parts of it. One is this loan. You can still apply for it. There's a link here that I put. You could also just Google it. It's if you are in need, this is not a forgivable loan. So it is a loan that you need to repay, but it's a lot of money, up to $500,000 at a low interest rate, 2.75%. And that first payment is deferred for 18 months. So for most folks, it's going to be a better deal than a line of credit you would get from your bank.
Mhm,
Uh, in addition to that, you have these advances and supplemental advances, which are grants. So it's not a loan, but they do have requirements about sort of how needy you are. They base it on being in a low income community, which is a census description. Again, there's links here that you can put in your zip code or your address and find out if that's you. The main thing to say here is you don't actually apply for this. If you apply for the EIDL loan and you put in the
mhm.
information, the SBA will know about you and target you in terms of target you to get some free money. So there's nothing for you to do except if you apply for the loan, you also become eligible for these advances. And if you previously received a grant advance, but it was only $1,000, their job is to try and get that up to $10,000 if you qualify. So again, nothing for you to do here in terms of the grants, but in terms of the loan, if you are in need of cash, it's a really good deal.
Okay, question for you, Chitra. When we look at, or when the SBA looks at your location, right,
Mhm.
and the census tract, are they looking at the census tract of the business, or are they looking at the census tract for the owner?
Uh, they are looking for the census tract of the business. And so that's the address that's going to go in there.
Mhm,
Unfortunately, if you're serving sort of a wide area, it's going to be the address that you're incorporated with. But
mhm,
so it won't be your personal home address, but it will be wherever your business address is for purposes of your federal, right? If you're
mhm.
paying taxes, if you are incorporated, like whatever your business address is listed as. So that's what they're going to use, which is unfortunate if you end up serving a lot more low income areas. It's just not where your office is located, but they need some basis.
Mhm.
It's $15,000, which is great, but we're talking about a lot more money today. And
Mhm.
so I sort of think if you get it, amazing. You don't have to do any work for it. And if you don't, it's okay because folks who have located their offices in those areas, great. Like, let's get money flowing to them. So I think it is what it is.
Okay. Yeah. Thank you so much for clarifying. And they could also leverage, with other programs too. I guess that we're not going to talk about today, based on location. But my question to you, as we lay the foundation, what exactly is the American Rescue Plan?
The American Rescue Plan, again, I'll share my screen again. I think I'm going to share my screen. Okay, good.
Okay.
Yes. All right. The American Rescue Plan, which was passed in March, gave a whole bunch of things, some of which I've listed right here that you can see. We just talked about the PPP and EIDL.
Mm-hmm.
What the first thing, I think the most important thing I should say is this overview is not comprehensive. So I have a link here to the National Council on Nonprofits, who have a really much more comprehensive overview. There's a lot in here. This was passed in March by the Biden administration. I've tried to put some of the highlights. We're going to talk about these tax credits. We're focusing today on the employee retention tax credit. So I just want to highlight that there are other tax credits available. Paid leave, that is leave if you are sick, either you have corona-like symptoms, if you are getting vaccinated, if you have to take care of your kids, not because they're sick, but because their schools are closed due to corona. Those tax credits have been extended through the end of September.
Mm-hmm.
Unemployment benefits have been extended, not just for individuals, but also if you're a nonprofit who self-insures, meaning rather than paying it through your payroll taxes, you pay every time someone makes an unemployment claim, you can
Mm-hmm.
be reimbursed for 75% of those costs. So they're really trying to be like, if organizations are struggling because their employees have claimed unemployment, how do we make that how do we make sure that employers are not feeling frustrated that their employees are claiming unemployment, right?
Mm-hmm.
So they're reimbursing you. Then what I have, these bottom three are all these huge funding opportunities, which I feel like it's great that you've been talking about federal grants, because I think there's a lot of money that has flowed in both to federal grants, but also at the state and local level that's being reallocated. And so again, I encourage people just to find out about the sheer money that there is. I mean, something that I saw that I didn't have space to list is I didn't realize that AmeriCorps got refunded at a much higher level so that more people could get volunteers.
Oh,
Yeah,
awesome.
yeah, right. I didn't know that. So I think there's a lot, and it's worth, again, I think the National Council on Nonprofits does a really good job of um, it is not overwhelming, but they do list everything that might be
Mm-hmm.
relevant for you, because you're going to hear about it in bits and pieces depending on your industry. But if it would be less disorienting to see everything, I think their overview is really great.
Mm-hmm. Yes, yes, yes. So exactly, what is a tax credit? And how is that different from a tax deduction?
Yeah, that's a really good question. So a tax deduction is it reduces how much of your income is subject to taxes. And we know a lot about this in nonprofits because we always tell people, oh, you get a charitable deduction. And what that means is that if someone makes a donation to our organization, maybe of $1,000, depending on what tax bracket they're in,
Mm-hmm.
they will pay less taxes. They Just because someone makes $1,000 donation doesn't mean they pay $1,000 less in taxes. They pay a proportion less in taxes. So a deduction reduces the amount of your income that is taxed, but importantly, a deduction is never for anybody, never dollar for dollar. It's going to be
Mm-hmm.
higher for people who are in higher tax brackets, but it's always going to be a percentage saved.
Mm-hmm. Gotcha.
In contrast, tax credits are far more exciting because, as I like bolded here, it's dollar for dollar, a reduction of your tax liability. So if you get $1,000 tax credit, you pay $1,000 less in taxes. It's
Mm-hmm.
even more exciting when we look at what we're talking about today, which are refundable tax credits, which
Mm.
means that even if you owed $500, let's say, if you got $1,000 tax credit, you would just get $500 back. It means you're not just offsetting the taxes you owe, you can get in excess of the taxes that
Mm.
you owe. So tax
Wow.
credits, refundable tax credits, very, very exciting.
And how does that work for nonprofits? You think of nonprofits, we're like, oh, we don't pay any taxes. So how can nonprofits actually benefit from these tax credits?
This is my favorite question, as you know, Valerie, because I really want to remind everyone that nonprofits do pay taxes. And I think that's it's important in terms of this accessing this credit. But if we take a step back, it's important for two other reasons. I think this is a chart that shows from the Tax Policy Center, who puts out really, I feel like if you might be interested in taxes, they put out really
Yes,
great
yes.
things on understanding taxes. But if you see over time, this is about the federal budget and shows sort of what's funding it. And if what you see here is that social insurance or payroll tax, there's a period of time in the 60s when it's about the same, and
Mm-hmm.
over time, corporate taxes have reduced, but payroll taxes have actually increased as a proportion of the budget. And I think this is useful to think about in the sense that we call ourselves tax exempt organizations, but the only thing we're exempt from is paying this corporate tax, right? Our
Mm-hmm.
employees, and we pay individual income tax, and we pay payroll tax for our employees. And so when thinking about the fact that we're being tax exempt, we miss the fact that, in fact, we are paying payroll taxes, which fund a larger part of the federal budget, and that over time, corporate entities are actually paying a far lower part. And so I think it's important, just as an identity, to recognize that nonprofits actually are taxpayers and have taxpayer rights accordingly and should make those claims. Like the benefits of being tax exempt is essentially we're not paying this portion, but we are paying this portion. And when we talk about payroll taxes, we're talking about FICA, and both employers and employees pay FICA.
Mm-hmm.
Specifically for employer payroll taxes, we're limiting ourselves to the employer portion of Social Security and Medicare, which
Mm-hmm.
are taxes that we pay on top of compensation. So we pay people's salary, and then on top of that, we're paying payroll taxes, the Social Security and Medicare. I just think it's important. The FICA things are so important that you your payroll provider is regularly making deposits, not
Yeah.
just when you pay payroll, but your payroll provider or your PEO is regularly making deposits to the US Treasury throughout the quarter. And
Mm-hmm.
then um, if you ever want to be curious, this is just something that I've discovered in the process. Paychecks or ADP or Paylocity or one of these firms might be doing everything for you. You still, as an employer, have the responsibility of paying the payroll taxes. So even if you're using a payroll provider, if for any reason the payroll taxes are paid late or
Mhm.
not paid, you still have to pay the fine. And so I encourage folks, you can check this out, the electronic federal tax payment system. You can use this to make sure that it's being deposited. So there's a link here. The
Okay.
other thing that's important just to know about, sorry, I was going to say this and then and then you interrupt me, or you're
Oh,
not even interrupting,
I'm
but I'm just going to get
so
through this
sorry.
941s. No, I just want to make sure that I'm focusing on these 941s is, uh, at the end of the quarter, the same way that you pay, at the end of every year, we do tax returns. And a tax returns is where we're basically reconciling. We do the same thing for payroll taxes, but it's on this form 941. And
Mhm.
so this is where the money that's going between the bank and the treasury gets reconciled. So if you've paid a little extra, it's going to come back to you. If you need to pay a little bit more, it's going to go to the treasury. And now I will pause. Sorry. I just wanted to make sure that we wanted to emphasize this 941 is a really important form, and we're going to keep coming
Mhm.
back to it when we talk about tax credits.
Yes, yes, yes. And thank you so much for that. You are referencing posting links. Our viewers are not, unfortunately, going to be able to see the links that you're posting. But what I could do is make sure that after this is done, that I
Mm-hmm.
can copy the links and post them in chat. People can come back, and then we can also be referred to your website, which has all of this stuff. And we can also get your contact information so that folks can contact
Sure.
you.
And what I can do, Valerie, at some point, if I'm not, when I'm not sharing this, is I can do a link to this whole deck, and people can have the links are all embedded in the deck, and I can share the whole slide deck with
Yeah,
your folks. If we
yeah.
if we have a few minutes, I can put in the chat right now. I can put my email
Okay.
address, so if people want to get the deck, and I can also try and do it while,
Okay.
yeah,
Awesome. Awesome.
links are,
So,
I understand that links are super important. So
yes, they
because
are.
I don't want to leave people without links.
Yes, you have so much stuff to share. I always learn so much when I talk to you. All right. So now I just want to do a deeper dive into the employee retention tax credit. That's really why we're here and how nonprofits can take advantage of it.
Hmm. So yeah, so I think where I'm going to start with the employee retention tax credit is just to say, I think the most important thing I want to say is it's a lot of money. So I think it's a lot of money. I don't know. I want to make it's a lot of money, which is why you should be interested in it, and
Mhm.
most orgs will qualify for it. In terms of what we're talking about here, for 2020, you can receive up to 50% of unallocated qualified wages. And unallocated means wages that you've not been reimbursed by anyone else, whether that be your PPP loan or a federal contract. So, like all things, we always have to be concerned about double dipping. And it gets capped at $10,000. But what we're looking at is for organizations that have less than 100 employees, and I'll talk about more than 100 in a second, but for less than 100 employees, you're looking at up to $5,000 per an employee for 2020. And that's going to be $5,000 either as a credit, meaning towards your payroll taxes in the future, or as just cash back. And that's going to be general operating cash, so unrestricted cash per an employee. So if you just do a count, and this is all employees, including part-time employees. So essentially anybody who worked for you in 2020, you're looking at 50% of their wages that haven't been covered by anybody else. So
Wow.
part-time folks, short-term people, but not independent contractors, because you don't pay payroll taxes for them. So anybody you pay payroll taxes for, you can get 50% of their salary plus healthcare costs back, capped at 10,000, so
Wow.
$5,000. And I want folks to be excited about that, because then the big reveal is in 2021, it's much more generous. So in 2021, you're looking at 70% of of these wages up to $10,000, and it's not for
Mhm.
the year like 2020, it's per quarter.
Okay.
So it's $7,000 per an employee per quarter. So in 2021, you're looking at potentially $28,000 per an employee, and then we've got our 5,000 in 2020. So we're looking at potentially $33,000 per employee if you're eligible for this.
Okay, so
And
question
yeah.
for you. So this is on top of what was allocated in 2020 and not instead of?
Not instead of. So these you can get both. You can get the 2020 and 2021.
Mhm,
And we'll talk about it, but you have 3 years to apply. So
mhm,
I feel really excited because I feel like so much of pandemic relief, even if it's lucrative, it feels like so much of it is urgency of like, you must do this now. And I know folks are exhausted. And
mhm,
so in the same way that if you don't pay your taxes, they don't go away. Tax credits don't go away. And so you've got 3 years to apply for these. They're there. And I want people to get excited, but you don't have to run out and do this immediately, which makes it doubly exciting because I think probably people need to rest a little bit. I will put an important qualifier here. So the one qualifier that's important, and I've started, is unallocated, meaning if you have employees whose entire salary and healthcare is covered by a contract or some other funder, their wages have been covered, so you're not going to be able to claim this, right? This is for salary that's not being covered by another source. That's one important qualification. The other important qualification is the size of your organization. And this is based, they measure this by the same way they do it for health insurance, so the ACA, so 30 hours a week or more. In
mhm,
2020, small employers are considered 100 or less. So for 100 or less employees, you get up to 5,000. If you have more than 100 employees, you can only claim this $5,000 for certain employees. So there's a really interesting equity push here where smaller organizations, it's
mhm,
much easier. If you're larger, it's a little bit more complicated. I will say that if you have 100 but under 500, what they did in 2021 is they made it not only far more generous, they also said that the standard for what's considered small is now 500 or less.
mhm,
So if you're above this 100 here, but you're under 500, you can still get the 7,000 per quarter. And if you're above, you can still claim it. You're just not going to be able to claim it for all the employees. You're only going to be able to claim it for employees who you kept on payroll or on healthcare but weren't working.
mhm,
So people who you felt like, okay, we're just going to, maybe your teaching artists couldn't do any work, or your security guards, didn't have anything to do, but you kept them on payroll. What they're saying is they're going to reward you for that period of time if you're large. But if you're small, and again, small is 100 or less for 2020, but much more generous in 2021 for 500 or less,
mhm.
you qualify. It's everybody, as long as those wages weren't reimbursed by anybody else.
Okay, great. So can churches also take advantage of this program?
Yes. Yes, they can, as long as they're paying payroll taxes. So again, you need to be paying payroll taxes, not because the payroll taxes are being reimbursed, but
Mhm,
we're using payroll taxes as the currency. So again, this
mhm,
little this little chart here is important because what the payroll taxes are, is it one, it confirms that you have employees who you are putting money in their long-term future, right? You're investing money in Social Security and Medicare for them. Also, just for logistical purposes, the fact that there's money going back and forth between your bank and the treasury makes it easy for these credits to get paid back to you because they already have a way of connecting with your bank. So what's important here is payroll taxes are the currency. It's not what's being reimbursed. So Valerie, if I were your employee and you paid, $10,000 or $5,000 in payroll taxes for me, you could still be eligible for a lot more back, both
mhm,
because it's refundable, but also because what's being reimbursed are my wages, my salary.
mhm.
We're just using payroll taxes to do them. So again, churches are totally fine. Anybody is totally fine. The two, let's see who's not totally fine here is
Mhm.
if you are self-employed and you don't have any employees, you're not paying payroll taxes on behalf of anybody else. So it's not going to count.
Mhm.
Independent, if you pay independent contractors, it doesn't count because you don't pay payroll taxes for them. If you are a government entity, there's different limitations. So this is assuming that you are not a government agency. You might still qualify. It's a little bit more complicated, but everybody else qualifies. The more employees you have that stays in that small category, the more money you'll get, but you're all eligible. So even if you have two employees, or even if you're the only employee, as long as payroll taxes are being paid, you
Mhm.
qualify.
Okay. And forgive me, I may have missed it, but is there a cap? Is there a limit to the total number of employees, one way or the other, that can be covered?
So there's a cap on the number of employees you can cover in full, which is going to be 500.
Okay.
Once you have more than 500 employees, you can only count the
Ah.
employees who you've either kept on salary or on healthcare, but who
Mhm.
aren't working during the pandemic. So for if you're 500 or under in 2021, even if you were paying people and they're working, you still qualify for the credit. But once you get larger, they want to incentivize the behavior for organizations who maybe shut down some part of their operations but were generous and kept their employees on healthcare or on
Mhm.
salary. They are only going to let you cover those because you're large. But if you're small, and small, 500 is a lot. Like this is
Mhm.
500 people working 30 hours a week or more. Everybody is covered, meaning you can claim this credit for every single
Wow.
employee as long as nobody else covered it.
Wow. That is a lot of money. Lot,
It's a
lot.
lot. It's a lot of money. Yeah.
Okay. And is there some report, I guess, that Congress has or the SBA has that is giving us a status? And I know this is not something we discussed earlier. That gives us a status as to how much money has been dispersed so far just with the ERTC.
They haven't. They're behind. I mean, so what the the IRS has said they are behind.
Hmm.
So while it is a lot of money, it isn't necessarily an immediate cash flow situation because there's lag time when you file for it. And so I think the lag time right now is 5 to 6 months. And the thing that's
Wow.
important to remember is they only announced that organizations were eligible for the ERTC in December. So initially the ERTC was part of the CARES Act. So it started the same time as we heard about PPP, but
Hmm.
at that point they said you can't get both. And so for most folks, if you haven't heard about it, that's why, because you couldn't get both. They reversed that in December of 2020, but December 2020 is also when they announced the second draw PPP loan. So attention went there.
Hmm.
And so part of what I think is there's been lag time of organizations claiming it because they weren't eligible for it. And
Gotcha.
so there's that lag time. There's a way to apply for these. I'm just going to look for this slide on it. There's a way to apply for these credits retro retroactively, but also in advance.
Hmm.
Most nonprofits are going to be applying for them retroactively, both because you didn't know they existed, but also because you didn't know they existed, but also because often you don't know how you're allocating your salaries until later. And
Hmm.
so if you're applying for it retroactively, you're always going to have to wait. And that's unfortunate, right? Because again, it's not going to
Hmm.
be a cash flow thing. So if your immediate need is cash flow, you're much better off with something like the EIDL, which is that loan, because they
Hmm.
have a fast turnaround time. I just want to look at this slide. Sorry, I've got to go through all of them. I don't mean to do that. But
Okay.
I'm just going to
Okay.
scroll through. There's a lot
Yeah.
here.
Let me know when
Uh,
you're ready, and I'll add it to the stream when you find it.
Yeah, when I find it. Oh, that's smart of
Yeah.
you. Okay.
Okay. And thank,
when I find it,
yeah.
I had it on my other slide, but well, let's just
Okay.
say let's just
Okay.
say I'm just going to say there's three ways of applying for it. There is a
Okay.
way of applying in advance called the Form 7200, but you
Okay.
would have to do that before the end of a quarter. And most of the time, we don't know that we don't know what our allocations look like through the end of the quarter. And so I think we are almost always going to be applying for it retroactively, which means there's lag time. So I can't answer your question of how many people are eligible for it, but I can say that people are getting it, but it often is 5 months. So this
Mm-hmm.
is great for thinking of your net benefits, right? Your net revenue. It isn't great as an immediate infusion of cash. It's great as sort of a longer term
Mm-hmm.
infusion. So if you think about what am I going to do next year when a lot of this pandemic relief dries up, or how am I going to replace the gala because we still don't want to have it next year? I would think of it in those terms as opposed to
Got it.
a short term benefit.
Yeah, and is it possible to leverage these future payments? So if you know you're going to get X number of tax credits sometime in the future, say a year from now, can you take that to the bank and get a loan against it?
I don't know if you can do that. I mean, I do think what you can do though is you can recognize the moment you make the claim for the tax credit, you can recognize it as revenue in your
Oh,
books.
okay, got it.
So, in that sense, because you think of it like a conditional contribution, so the same way of we've satisfied all the conditions, substantive conditions. And so you can claim that revenue and you can confirm that with your auditor, but the AICPA, which is the accountants like association, they've put out a lot of technical guidance on this, more on PPP than on
Mm-hmm.
tax credits, but it's similar. Like similarly for PPP,
Mm-hmm.
when you know you have forgiveness, when you filled out the forgiveness application, you can recognize the revenue then. You don't have to wait for the SBA because that's considered administrative. It's not substantive. And
Mm-hmm.
so, because it's not actually, I know that it feels esoteric and complicated, but it's actually pretty clear. Meaning, if you fill out your PPP forgiveness application and you get full
Mm-hmm.
forgiveness, unless you've made a mathematical error, it's not that the SBA is like, do they deserve it? Do we like them? If you qualify for it, you qualify for it. It's just a matter of them confirming. Similarly, here, when you apply for the tax credits, you qualify for them, and we're
Mm-hmm.
done. And then you're waiting for the money, but there's not going to be a recalculation that you don't actually qualify, right? Unless you've made a math mistake. So it's more that you're filling something out, you decide, wow, I do qualify for this, and then they confirm it. But they're not necessarily like looking, right, very, very closely to make sure it's right because the forms have you do the math for them, if that makes sense. So
Yeah, yeah, this is really interesting stuff. Yeah, and I'm just wondering too, do people ever think that this is too good to be true and then they get scared? It's like, how do
yes,
we protect ourselves?
part of why I'm super excited to be here today is I actually think so. I think there's two things. I think with things like these tax credit, there's a lot of scam artists that come out and will say you can get $200,000 in tax credits. Sometimes they're right, but they're going to take a percentage off the top. Like we're going to take 15% or 20% of your tax credits. I think that can be dangerous for nonprofits because often the folks who are doing this are more accustomed to small businesses where you don't have restricted funding. And so there's a lot of people trying to claim the credits. There's a lot of people offering to do it for you in the same way that tax preparers will do stuff. And sometimes they're legit and not legit. And I think a pause is welcome. But then I also think, right, and why I feel really excited about doing these and want to get people excited is I worry more that people think, wow, this is a lot of money. Do nonprofits really pay taxes? I don't know how much we suffered, like compared to a lot of other organizations, we did okay. And
Hmm.
so maybe I don't want to take that much. And I'm
Right.
a big proponent of like the government has made a decision about how you qualify. If
Hmm.
you don't qualify, you don't qualify, and I think there's clearly there's clear lines, and I am not in. I'm not interested in people gaming the system. I do think that you need to understand the rules in order to maximize, because if you feel a little bit like I'm going to take some of this, but I'm going to protect myself by not being greedy, I feel like there's a superstitiousness that sort of takes us over. And what's really important is to say this is not like the PPP in which there is a limited pot, and by taking a lot, you're preventing others. Everybody can get this. And I also think, and you can pay it forward, right? If you do really well, do great things with your organization or help someone else claim them. But by understanding the rules and understanding the risks, I I think it's important to understand, not so that you worry and get caught, but so that actually you feel much bolder and much more confident doing it. And so I think
Mhm.
yes, it's important to be careful of a few things, and not because you're going to get caught. I think the projection is that 0.1% of these will be audited. So
Mhm.
I don't want to pretend that the IRS is going to come get you. I actually don't think that the IRS is the bogeyman or the bad guy in this story. I think they actually have laid out really clear things. I think it's important to understand the rules so that you and your board and your organization as a whole feel comfortable, because if you do this on your own, it might feel like what are they doing? But having everybody understand and ask all of the questions now, because again, you have 3 years, it's a
Mhm.
really good way for everyone to feel comfortable. I will say that you can be audited on these for up to 5 years.
Mhm.
And we know that there's a lot of turnover within the nonprofit sector. And I
Mhm.
think maybe all of us have walked into a job where our predecessor did not leave us notes. And so I, again, it is unlikely
Yeah.
anyone's going to get audited. I think acting like your successor is going to get audited, and imagine what it is to walk in and be the finance person and the IRS shows up,
Mhm.
is terrible. So I'm very much in favor of documenting everything, because I think that ensures you won't be audited, but it's a nice paper trail to leave whoever comes after you. But it's also a nice process to go through yourself. And so I'm going to share um,
Mhm.
a couple of slides on this, because I think it's a really important. I think, oops, not this one. Sorry for a
Okay.
second.
Oh,
A couple of
that's quite all right. And I know you have many slides. This is a very
different.
detailed process. And as you were going through, I'm just thinking, I'm not sure if you have any slides that will guide us through the process from start to finish.
I
You
do. I
see
do. You know what I'll do? As soon as, let me do these slides and then I'll put in the link. I've done a couple of presentations for at other places. Nobody as amazing as Nonprofit Utopia, but I I did one for the Institute for Nonprofit Practice as well as the California Nonprofit Alliance. Both
Mhm.
of those have sort of details about the process as well as the accompanying slide decks. So I encourage, I'll put the links in right
Yeah.
now as soon as I finish with these slides, and that way you can
Mhm.
you can have them immediately. What I want to show though right now though is just in terms of being. See, I'm excited because I have some gifts. That's why I'm like, but first let me do my gifts because they're not on those. The
Okay.
two things you want to be concerned about is double dipping. And I feel like, I don't know if folks remember, but there's this Seinfeld episode, right, where George double dips, right? And then he's like, no, I didn't double dip.
Right.
Is you have to be really careful about double dipping. And that's always true. So that's nothing new for these tax credits. It's something that is always going to be true. And so that's, you have to watch for it. The other thing is board member liability. And this is, I don't want to scare you. There's a lot of articles about tax liability. And here's the thing is that payroll taxes, because it's funding Social Security and Medicare for employees, if you fail to pay payroll taxes, or you pay them late, or you get too much of a credit, it is as if you haven't paid the payroll taxes, and nonprofit board members um, can be responsible in their individual capacity. There was a Supreme Court case about 10 years ago that
Mhm.
caused a lot of freak out, because what the IRS said is we can go after anybody, including individual board members for these
Mhm.
penalties. So we have to figure out double dipping and board member liability. For double dipping, the main thing, right? The answer to everything is like a good Excel sheet and an allocation schedule, right? To make sure that the cash compensation that you have for a period of time,
Mhm.
if it's been reimbursed by, if you've taken other tax credits or a contract covers, 50% of somebody's salary, that, or you've reimbursed some of it from PPP, that you're not also using it for tax credits. So basically, a really good spreadsheet is your friend. And one of the things I do offer is a whole workshop just on a double dipping deep dive, I call it. I have a
Mhm.
lot of different templates that different organizations have used. So real, because depending on if you have lots of government contracts, or you have to deal with indirect cost rates, or you don't have much restricted funding, you, a different allocation schedule might be useful for you. So
Mhm.
part of what we do is talk about the concepts, but then what I do is after it, I have these these work blocks, which are like Excel parties. So like where everybody, like, you think about your best sort of study group in college or something, where everybody is just working on making sure that they're getting it right, and then I can give feedback. But often the most useful feedback is from your peers, who will have a really beautifully color coded, Excel sheet. And so I really believe in that power of community here can be super useful. So double dipping is one thing. And again, that's no different from any other time you
Mhm.
have a funding source. Um,
Right.
the other thing in terms of protecting your organization, in terms of thinking of board member liability, is checking your D&O, which stands for Directors and Officers Liability Insurance. It's,
Mhm.
if you don't have any, it's probably a good time to get it in general. Usually, almost always, it has protection against underpayment of payroll taxes. So if you have this in place, board members won't be individually liable. And I imagine, Valerie, that you probably have advice in general about having this kind of insurance ready for your board members, which make it easier for your board members to serve without personal worry. In
Mhm.
addition, documenting it. And I would say memorializing, having the conversation before you actually submit, not
Mhm.
because the IRS is going to scrutinize your application, mainly because the motivation tends to reduce after you submit the claim. You don't feel like, let's have it now. But if you have a conversation with your finance committee or your board to be like, hey, we have these tax credits, here's how we're doing it. And everyone asks whatever hard questions they want to ask and then makes a collective decision. One,
Mhm.
it takes the responsibility off of any individual staff member, but also the fact that you have it and then memorialize it in some way demonstrates that you're acting in good faith, so that you weren't
Mhm.
just trying to get these credits to get some money. And what I think I've seen happen is often board members can often ask challenging questions, but this is a situation in which those questions should actually be welcomed, because the more challenging they are now, the better
Mhm.
position you are in case of an audit. So I think it's a really good opportunity to have those conversations. I think a lot of the important but often not urgent, right? Like, what does our liability insurance look like? What are payroll taxes? What are we doing for our employees? Like
Mhm.
all of these things come up in this. So I think it's a good reason to motivate, because you're getting money, to have all of those conversations around governance and fiduciary responsibility that we often don't have. So I'm a
Okay.
favor of that.
Question for you in terms of memorialization. I don't know if that's a word. When you memorialize,
Pretending it is. Okay,
okay,
yeah.
assuming that's such a word, um, is that just taking minutes, or is that a more detailed note? Note taking.
I think taking minutes is fine. I mean, I think I've been asking people what they do for committee meetings, because often, rather than a whole board conversation, this feels like it sits well with the finance committee, who might be a little bit more able to understand the specifics. And
Mhm.
so often what is happening is that a finance committee will have the conversation and
Mhm.
then take notes. And then at the next general board meeting, the finance committee
Right.
reports out, and then as part of it, those notes get memorialized. So it could either be that committee minutes are memorialized in their own way. But if you don't have that practice, it is usually that the committee report out gets
Mm-hmm.
memorialized, right, with an attachment. And so you want maybe detailed notes taken at the finance committee level. And I think the detailed notes, in fact, could be a memo that gets
Mm-hmm.
prepared by whoever is doing the credits. And then you incorporate any questions that got asked or any changes. And so I think it isn't recording the conversation. It is detailing the process by which you determined you were eligible, the process by which you determined that these wages were not reimbursed by anybody else. And again, all the work you would do, you're just documenting and you're essentially sharing that risk around, but also ensuring that if you document it, there's no worries if you leave because it's all there and everybody knows about it. And I think it's a good practice in general. And it helps if part of what you've been trying to do is to increase your board member engagement in understanding the finances or understanding their governance responsibilities. This is a good way in that has a really nice carrot of the volume of money you
Mm-hmm.
could get.
Yeah, and as I listen to you, I think that there are other benefits too. One, minutes are legally binding, so whatever you post in your minutes
Mm-hmm.
or attachments, that is legally binding. It documents the decisions that were made.
Mm-hmm.
And then two, I think it goes to transparency. If you want to bring on more board members, they'll have a really good feel for how decisions were made and be able to get up to speed. And as you alluded to, it's good for future employees who come on and they know
Yeah,
what to do.
it's good. And I think, again, transparency, governance are often things that either we ignore or come up when there's a problem.
Right.
And so I think as a way of getting at, right, maybe you've needed to do a broad look at governance or talk about board member
Mhm.
responsibilities, but nobody is ever that engaged. This is a really good way to do that and have that conversation and really,
Mhm.
because again, there's a carrot, and I think it's really rare that there's a carrot. And when I've seen these conversations, it's often when there's some legal issue or something and it's
Yeah.
negative, and then everyone's like, why didn't we look at this, right? And that, like, I don't know who's looked at their insurance, right, the specifics of
Mhm.
their insurance claim. And so it forces us to do these. It doesn't force us, but I think it's a good way to do
Yeah.
these things, because otherwise we're never incentivized, because not nobody is lazy, everyone is just doing too many things and has too many responsibilities.
Okay, great. Question for you and the way you work with clients on these issues.
Yeah, I'm going to show my last set of slides, and then I'm going to put those links in, because I definitely want to I definitely want to share things. So I think what is important, I think, for me to stay as a starting point is I was an executive director, and so I feel like my starting point is I understand what it's like to be overwhelmed and do too many things. I don't These tax credits in themselves aren't hard, but when you are an executive director or a finance ops person, everything is
Mhm.
hard because you're doing too many things. And so you're a generalist as opposed to a specialist. And it's really hard to understand. It's really hard to understand the specifics. I'm going to start with this. Just
Okay.
this is a
All
little
right.
bit of guessing. Can you see the slide? Just a
Yes.
little bit of like, guess what this means. So what this means is the first thing I want to say. Th- I stopped being an executive director on my last day was March 13th, which was also the first day that they decided that the schools were going to shut down in New York City, which is where I'm usually based. And I will say that the entire pandemic, right, having kids home and all of that, every day has been easier than being an executive director not during a pandemic. So I feel like it must be incredibly hard. And an executive director or finance person or anyone who's managing this, the challenges are huge. And so the first thing I want to say is what this slide is trying to do. I just got very excited about it. Is you have choices, right? And so that first one is you can say you're gonna basically not leave anything on the table. But what this means is you could have heard this today. Oh, there's these tax credits. They're really amazing. And you could just be like, I'm excited, but I'm exhausted. And I'm going to tell you that's fine. You can wait for a year, finish off your PPP forgiveness, finish off everything, and then come back
Mm-hmm.
and ensure that you get those tax credits and you don't leave anything on the table. So that's one approach. And I want to start from the beginning of just saying that's fine. I'm excited about these tax credits. You don't have to do them right now. There will be the money left over. You can wait. The other option is if you want to, if so the Tina Turner is here because this is Tina Turner and Mad Max Thunderdome, is if you want to maximize. So if you want to maximize these tax credits, not just take whatever is left, but you're like, oh, I can get up to, $7,000 for a quarter. I want that full $7,000, not just whatever's left. I'll take it. It's more than I expected. You need to start strategizing now. But again, there's money either way. It's just there. If you want to maximize, you need to go in earlier rather than later. So that's the first thing to think about. In terms of immediate next steps, these are sort of the top two are what I would say everybody should be doing, meaning the way that you claim these credits is through you can do it on your own or through your payroll provider or PEO, but it's always through this 941, this quarterly tax return. What you need to do is talk to your payroll provider or PEO about what they're doing. It's very hard for me to say because every like ADP and Paychecks are doing different things than Paylocity, which are doing things different than TriNet. So it's very much dependent on who your payroll provider is. But
Mm-hmm.
even if you are like, I'm going to take August off and then come back to this, I would say just email your payroll provider and be like, hey, what are these tax credits about? Just to get a sense of what they're doing so you can come back to it. The second thing is check your liability or insurance or get some liability insurance, and maybe you have more recommendations than I do. I don't actually have recommendations on liability insurance, but
Mm-hmm.
maybe you do, Valerie. But I think it's good to make sure you're covered.
Mm-hmm.
If you decide you want to maximize the credits, one sort of basic strategy you can do is when you're thinking about your PPP loan forgiveness, you want to maximize the amount of your non-payroll expenses. So you want to see if you can get to 40% for those, as well as non-cash compensation payroll expenses. So that's going to be your retirement, your disability insurance, life insurance, because you can't use those for the tax credits. You can use those for PPP. So if this is sort of, let's just say, medium level, if you're like, I'm not ready for these tax credits yet, but if you're doing your PPP forgiveness, you want to think about how to reduce the amount of cash compensation you're using for the PPP. So you're sort of freeing it up for tax credits. In terms of what I offer, I have a website. That's me. At a basic level, you could. There's a newsletter where I send out resources, particularly of free webinars I'm doing, and sort of free slide decks and things like that. If you sign up for the newsletter, I won't spam you, but you'll be able to get material. I also wanted to just say, just because I have a couple of things coming up this week. Again, there's more, so you don't have to do it this week. I feel very strongly about not forcing people. One thing I have is what I call a community support desk, which is unlimited questions that you can ask via email, but also these live Q&A hours. It's $50 a month. You can ask. This is for folks who mostly feel comfortable what they're doing, but maybe want a second eye sometimes. It's
Mm-hmm.
cheap, but what you get is the ability to ask questions. But I also, in my newsletter, then send some highlights of interesting questions that got asked, because sometimes what other people are asking is what we needed, which we didn't realize. So that's
Mm-hmm.
mostly for folks who either aren't sure what they need yet and don't want to spend that much money, or feel mostly comfortable but want a second eye. The second thing is this double dipping deep dive, which is making sure you're not double dipping. And so we've got a workshop coming up this week as well as next week. And there's a workshop where I talk about restricted funding and all of the rules. But in addition to getting to attend the workshop, you also can ask as many questions as you want for 2 weeks afterwards, but you also get invited to what I call these like Excel or work block parties, because I don't want you to just understand it. I want you to make your allocation schedule. So we've built in
Mhm.
time. You could choose not to come, but we've built in time for you to come, because I think often people can come for a webinar and then they're excited and then they get off and then all these things flood their desk. So the idea here is to have work blocks where you can actually just get it done, because once you have an allocation schedule, like everything is much easier. And finally, I have intensives, and an intensive means that we're doing everything. So I'm going step by step. Both, there's two different kinds of intensives I'm offering. One is on PPP forgiveness. One
Mhm.
is on the tax credits. But if you do an intensive, you basically get there's a launch workshop that's 3 hours, but you can come to one or come to a different one or watch it
Mhm.
recorded, where we're going step by step. And then
Mhm.
you get unlimited questions through the end of the year, but you also get a private session with me, which could just be because you have questions, but often I've actually done meetings with boards or finance committees. If you need someone else that's not you to explain what's happening, I
Mhm.
think that private session can be useful. And that way you're not paying me for my time privately. It's just added on. You can also register for the intensives and then say, I'm going to start coming in September. Again, right? The prices are right now are if you sign up by the end of July, good for the year. But I'm I'm really committed. I mean, the reason I said that, I think it's so hard to I'm cognizant of how much work everybody is juggling. I'm only doing this, meaning I am deeply in the weeds, and I want to say that I'm reading the small print so that everyone doesn't
Mhm.
have to. I don't think I am smarter at this stuff. I just think I've got the bandwidth for it. And so what
Mhm.
I'm really committed to is making sure people understand what they need to understand to get it, but not having to do the level of research I've done, because I'm not sure if it's going to serve you in the future necessarily, right? Some of these things are just pandemic related. And so part of
Mhm.
what I think is get help. And part of what I feel really strongly about is the sense of community. So we have a shared document where people are talking about who their payroll provider is and the process. So that way you could link up with someone who's already done it. I'm a big fan of pairing people up once someone's done it, because I think people are so excited once they've claimed the
Mhm.
credits. They're eager to share. And so I'm super excited about helping folks, and I'm super excited about people helping each other. And mostly I'm excited about trying to take something off people's plates, because again, with full respect for everyone who's doing all of the things,
Mhm.
there is way too much to be doing right now. And so I want people to take full advantage of this, but I feel like my job is to figure out how to make it as
Mhm.
easy for you as possible so you can get it, but you don't have to
Mhm.
spend hours on it. And what I don't want is, particularly for smaller organizations, I don't want a situation in which you're overwhelmed so you don't apply for it. So anything I can do to make it easier to motivate to apply, um, is going to will make me happy and hopefully make you happy. I just put a link in to a past webinar I did. Did you see it in the chat, Valerie?
Um, no, let me see. We have a private chat, so let me.
Oh, goodness. I've been in.
Yes, we've been in the private
I was
chat.
like, nobody has any I'm so sorry. I was in the private chat.
Yeah, hold on. I will
Can
share that.
I
Can you access?
I don't seem to
Okay.
be able to put my
Okay.
chat in there, only in the
Okay.
private chat. But if
Okay.
you're able to copy and paste that, what's there is essentially all of the slides I've used, and other links to everything that I've talked about. And I'll put one more if it's
Okay.
not too
Yeah.
cumbersome.
Oh no, not at all.
Okay, you're good. Okay.
Okay. Yeah, I got the first one
Yeah,
there.
and I'll do one more. They're just past webinars, but if you don't want to listen to me talk, there's also just slides as well as questions and answers. So
Mhm.
fairly detailed. I think the Cal nonprofits, which I'm about to do, we did a myself and someone named Robert, who actually received about $130,000 in past tax credits. We did
Wow.
questions and answers after the fact. So this one I'm about to give you has these
Okay.
really great had these really great questions and answers with most people's
Hmm.
questions. But again, you can email me as well. But that
Okay.
hopefully will cover everybody who needs links. You also can
Yeah.
email me. I guess
Awesome.
I put my email in the private, so I told you, Valerie, my
Yeah.
email, but you can
Yeah.
tell
Yeah.
everybody else.
Yeah. I posted your email already.
Hmm.
And what I'll do too, I will take all of these links as well as our recording, as well as some of the other links you shared with me.
There's a lot of links.
Yeah, a lot of links, but I'd love it. I'm gonna package all of that and send it, on my next email
Hmm.
newsletter, so
Okay.
people will also, to expand
Yep.
your audience for this.
That's great.
And then two, I'm just wondering, do you ever do one-on-ones? I know we're talking about your
Yeah.
website, but
I I do. I'm not taking any clients right now just because I feel like I'm fairly saturated. So my sort of trying
mhm,
to do it in a community way was a way of trying to serve more people. I probably will open up and I'll let you know when I open up. But
yeah,
part of what I'm not I mean, I'm happy to do one-on-one. I think what it does is it reinforces who's able to access this kind of support and who isn't. And that my excitement is for organizations often who don't have the capacity or the budget to pay somebody one-on-one. Even though you're going to get money, I think
mhm,
it's harder for smaller organizations to spend it. And while I like helping everyone, my preference is for the folks who it feels like it's hard to spend the money on getting a one-on-one consultant. And so that's why I've tried to keep the price points low. I also enjoy when people are able to support one another. So yes, I take private clients, and right now
mhm,
I am not, but I will probably open up in mid August or September for new
mhm,
clients. But I'm doing my best to do as many group things because
mhm,
it's who I prefer to serve, and I don't want to
mhm.
reinforce right the structure of if you can afford it, you get more benefits. So
Got it.
yeah,
Yeah, I got a couple organizations I need to introduce you to
okay.
that fit
And I'm
just.
like, or I'll just do favorite. I'm like, but maybe I'm open for values people. But no, I do private, and I think there's a way in which it's nice as a community because I think it's rare that there are opportunities where you don't feel like you're taking from somebody else, because often if we're applying for grants or even the PPP loan, there's a limited pot, so you want everyone to get it, but you're like, I need to do this. But tax credits there's a commitment to anyone who applies for it, so it's really nice because there actually isn't scarcity and we can all benefit from helping. So it's a really nice feeling of being able to support your peers, which I think everybody does, but sometimes we have feelings when someone gets the grant and we don't. And here is actually this win-win where actually everybody can get it, and you getting it doesn't reduce the chances of anyone else getting it, which I just think is really nice for us to get a real feeling of the abundance that I think many of us practice, but is not often made available to us. But in this one, right, thanks to the IRS, I guess, thanks to the CARES Act, it is in fact available, and I think that's really exciting.
Yeah, that's huge. I better fill out a form myself.
Yes, yes, you should.
So you gave me some really good ideas. All right.
Hmm.
I think that is. I think we answered most of the questions. We've gone through most of them. There are a couple that are outstanding, but I think we've hit the high points. And we've
If you
gone a
want, I mean,
little.
I'm happy if you want to ask me. You tell me if
Yeah.
there's
Okay.
anything I can answer anything if you want anything or
Yeah.
not.
Thank you so much, because we're going over our
Oh,
normal 1 hour.
okay,
But I'm happy. I'm happy
okay.
because there are some questions.
I wasn't sure. I just said I thought that, and I was like, oh, we should finish up. And then I was like, maybe it's 90 minutes, and there's all this time to fill. But okay, we are over. Okay, but
Yeah.
but it's fine if you want to ask a couple of things, and
Yeah.
we can. Or
Yeah, I'm looking at your community model and how
hmm
you encourage people to help one another. And I guess I'm putting myself um, I guess in a position of somebody who would be sharing information, do people have to necessarily disclose the payroll amounts? They're just talking about a process.
Yeah, no, and so there's a few things I do. I mean, one is I sign, so for my one-on-one work, I sign confidentiality agreements with everyone about payroll. For these, for example, these, I show people how to just basically, um, um, black out the column that has their employee names in it if they don't want to. I also don't ever record I don't record any of the Excel sessions. So those things are sort of live if you're there at the moment, but there's no um, recording, meaning that it's not going to be anywhere for anyone to see. But I also have templates that block out or say employee AB or get rid of that column. So people are only sharing by definition the amounts, but not who is it. So you might be sharing payroll, but not anyone in it. The other thing is when there are these Excel parties, when people are working on things, we do these rooms. So people can also do during that session a one-on-one where they're sharing with me if they don't want to. But I find on average, there's a lot of learning that happens when people look at each other's Excel sheets. Not like
Mhm.
the payroll feels exciting. And then what's actually more exciting is like, what's the formula you used, right? Like, I think what happens is very quickly, if
Mhm.
you're a finance person who's dealing with this, you are accustomed to seeing many things that maybe, and you're accustomed to having discretion, but what you're interested in is how you can be accurate and clear. And I think seeing other, like, I've designed a template, but I'm not in it right now. So my template suffers from that. And so what I've really enjoyed is I have 9 templates, I think, right now, which are organizations who've done real things. Their employee names aren't on it, but it's important for me to attribute to be like, Robert Pasquale, who did the California Nonprofit Alliance webinar for me, he was at a place called PRC in San Francisco. He shared his exact spreadsheet without the employee names, but it's nice because he's like, I used this spreadsheet to get $130,000. Here's my math. There's someone named Abdiel who's at a place called Groundwork Lawrence in Pennsylvania, and he similarly did one for his organization. Crystal, a woman at Support Center of New York. So part of what I like to do is to be able to give credit to these organizations and to the folks who've identified them, and then make sure there's no identifying characteristics of individuals on the spreadsheets. But what I would say is the specificity, in fact, often makes things far more helpful, and that people who are in the same situation as you can often be more useful than I can. I can tell you in the abstract how it works, but seeing someone who's like, oh, I did it like this is like, oh, that's my situation. And I don't think, I think we could spend, a week complimenting nonprofit folks and we still would not begin to fill the gap of the volume of people work that people are doing and the appreciation they receive for it. Particularly, I think, I don't want to get in trouble here, but I think admin finance folks compared to program folks are often right considered back office or not seen and are relevant when there's a problem.
Mhm.
But not like the finance person is never like the hero of the team. And I think this is a way because while it is fundraising and development, it's going to rely heavily on somebody who understands the finance portion. And I think this is a really exciting moment for like that
Mhm.
admin finance, right, staff to like get a little bit of status because I think they often are isolated and I think they often aren't getting credit unless something has gone wrong. And so what I have heard, and again, I'm working with smaller shop organizations, but what I've heard is actually the chance for people to connect with one another for finance, sometimes finance ops, HR people, right? The people who are doing all of the things that aren't programs feels really good because they are often not given the same kind of, I think, community building professional development opportunities that maybe executive leadership or program
Mhm.
people are. They get technical assistance, but not community. And I think having other people you can talk to, particularly if you're a solo shop finance person where you don't have a whole finance team, it's just you. And I'm thinking a lot about one of the things that a lot of people talk to me about. So I finished up doing a cohort of leaders of color, and it was both executive directors of color, but also finance folks of color. And what a lot of people talked about, which I hadn't really considered, was the challenges if you're a finance person of color who is not seen as being that radical or progressive enough by your program staff because you're always nagging them for receipts. I mean, this is the stereotype. And so they're like, ugh, you're not committed to the movement. And so there's that feeling of being seen as nagging and not radical. But then on the flip side, depending on if your ED is not a person of color, or your finance person on your board, or your treasurer is not a person of color, that they don't see you as being necessarily competent enough. So this strange kind of, I don't know, limbo between being seen as not being radical, but then on the other side, not being seen as being competent, which is why I talked about that part of what I offer to do is to come in and reinforce what people are saying to their board members, because having an outsider say the same thing can be helpful. And these tax credits are so lucrative that sometimes board members or EDs are like, no, that's not true. And then you're in this weird position. Mm-hmm. But anyhow, I am feeling I've never been the finance person. I have been the executive director, not turning in my receipts. So but I have sympathy for my finance folks. And I think they need a lot of community. And I've been thinking a lot that there hasn't been as much written. There's been a lot on executive leadership of color by the Race to Lead folks. And there's Cause Effective has done a lot of really good things around development, folks of color. But I think to be the finance person and then have this sort of dual consciousness of being the person who's sort of more buttoned up, but also the person who's not seen as being in private finance, maybe, I think, I don't know, it warrants further. I think they deserve our support. So I'm excited to support them in community, but also, yes, that was my long aside, but it's my current, I feel for them. It's a hard position to be in if finance is not seen as an integral part of the social justice work that many groups are doing.
Right. Okay. Yeah, we got a question from Kim, and I know this is not something you can answer. Valerie, how do I see the links you posted for this session? Unfortunately, you're watching from LinkedIn, and from what I can see, the comments don't necessarily post in session, and that's where we get most of the people. So Kim,
if we went to the LinkedIn thing, could we just put it in the comments?
We just put it in the comments. It's picked up on YouTube, Periscope, and all the Facebook channels, right?
Yes, but I'm also putting it in the LinkedIn right now.
Okay, great. Yeah, because if you're watching from LinkedIn, it doesn't automatically post. Just so folks know, LinkedIn, this is new for LinkedIn.
Mm-hmm.
The
So this is simulcast in 3 places at the same time? 4 places?
Yeah, actually 18. And LinkedIn is one. It's simulcast to about 3 Facebook channels, and then other, lesser known channels, and YouTube. So about 18 channels all together.
Got it. Oh, so people's icons are where, sorry, I'm a little bit slow here. People's icons are where they're joining from, which is why you knew Kim was joining from LinkedIn. And Kim, I just put it in the LinkedIn comments. So I think that works.
Yep. I was able to pick it up from the LinkedIn.
Okay. Great. Oh, and then it shows it. Okay. See, look I'm learning this. This is fascinating.
Yes. I think you should get it. And I do have some ideas for people I want you to meet here.
Okay. Great. We will talk. Okay. So are we good?
I think we're done. I just want to highlight one other comment. It was a comment and not so much a question. I can show your other links. But again, I'm going to make sure that everyone on my email list, has this video and have the links that you shared. And Cheryl may or may not still be with us. She was watching on Facebook. Thank you for putting this together. I'm not currently working with nonprofits at this capacity, but considering my previous engagements, this is really good information. So
thank you. Thank you, Cheryl. And again, I think the good news here is it's eligible. It's 3 years. So if you do start working with nonprofits, And I would say, I mean, I haven't done a survey, but I don't find that most people know about them. And so it's a great value add if you're coming in somewhere and you're like, oh, by the way, did you know about these? And let me help you get them. So I think it's a great thing to offer. And again, because they are eligible for a while, you don't have to do it immediately.
Okay, and Cheryl is still here. Thank you
Oh,
so
hi,
much.
Cheryl.
All righty. So I think that concludes everything. This has been very, very thorough. I will follow up with you, Chitra, so that I can introduce you to people who fit that
Hmm.
description you just shared with us.
Great.
And, and before we go, if there are any questions or comments from anyone in our listening audience, our viewing audience, please feel free to post right now. And this is from Cheryl. Thank you. I was
Oh,
considering starting a new nonprofit. Awesome. Well, Cheryl, you and I have to talk, and
hmm
definitely we can put you in contact with Chitra.
hmm
All righty. All right. So I want to say thank you again to everybody. It doesn't look like we have any more comments, but feel free to like and share this video. I think this is information that so many people need to know. And be sure and join us. We're going to be coming back on Wednesday so we can give you pointers as to how to increase your chances of getting federal grant funds. All right. And we definitely need to have Shifter back here, talking about other issues. As she indicated, the American Rescue Plan has so much other stuff beyond
hmm
the tax credits that we can still use. All right, so thanks again, everybody. And at this point, I'm going to end our broadcast and you take care.
All right. Bye.
Bye bye.